Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. African Energy Chamber says Africa's largest crude producers, Nigeria and Angola, are expected to drive the continent's oil output to 3.39 million barrels per day in 2025. Kenyan government asked citizens to submit views on imposition of sugar levy. As the dollar cools from record high, the South African rand stays flat after hitting a 9-month low against the buoyant dollar. It's good to have you join us. I'm Ladi Williams. Let's get a check on what's playing out in the markets now, starting with gold prices. They're up today, boosted by a weaker US dollar and inflation concerns, tied to President-elect Trump's potential tariff policies, which could affect the pace of Fed rate cuts. We see spot gold that's up 0.3% now that the US dollar has taken a breather there, $2,669 per ounce. US gold futures, $2,685, also up 0.3%. Other metals will track in the market there. Also in the green, palladium, platinum, just spot silver, no direction there, still $29.59. Unchanged. To oil prices now, we're seeing oil prices also eased, but they're still holding near the 4-month high, but 0.44% pullback there. As expected, some bulls try to take some profit, and the bears are trying to maybe drive the price down a bit. $78, that's for US WTI, 0.46% down. We're still at record highs at this point, but obviously there's always going to be some kind of cool down when the market or an asset class goes up in price. So other stories now, we see the Nigerian Electricity Regulatory Commission, they're saying it's completed the transfer of regulatory oversight to 4 states as part of the ongoing deregulation in the power sector. The NERC made this known on its X handle yesterday, noting it has begun the transfer of regulatory oversight to 10 states at the 10th of January 2025. According to the regulatory agency, the 4 states include Enugu, Ekiti, Ondo, and Imo that are now fully in charge of the regulation of the electricity tariffs. The NEC, their markets really, but NEC also mentioned that 10 states in the country are awaiting final approval to take over the oversight of the electricity market in their domain. We'll keep an eye on that. To other stories now, the telecommunication companies acting under directive of the Nigerian Communications Commission are set to temporarily cut off 18 banks from unstructured supplementary service data access due to their inability to settle a 200 billion naira debt that has accumulated since 2019. This decision, which is not expected to be immediate, follows a recent order by the Central Bank of Nigeria and the NCC, which ordered banks to pay a major part of the USSD debt owed to telecom operators. However, only 4 banks complied with the directive, while 18 banks and others flouted it. Meanwhile, the NCC says it will soon issue a public notice that will contain the names of the erring banks, which should prepare bank customers to seek alternatives during the suspension period. We'll definitely be looking out for those names. I'm sure no bank wants to be mentioned in that list. All right, to food matters now. The threat of food insecurity in Nigeria can be eliminated by more adoption of mechanized farming. This is according to the chief executive of the Seed Project Co. Limited, Dr. Zainab Gwadabe, because farming manually is more expensive, especially for rural dwellers. Dr. Gwadabe was a guest on Business Morning earlier. She had this to say. Take a listen.
Mechanization has a lot of impact, will have a lot of, if farmers are able to go into mechanization fully like everywhere else, like most developed countries, it will reduce post-harvest loss. I just want to give you an example. If you look at, if you're planting rice and you are using the traditional method, using hoes and everything to cultivate, and you decided to bring in to go into mechanization, maybe to bring someone to come with a tractor and do the labor for you, it will cost you averagely about 130,000 for harrowing of 1 hectare of land, which is sounds like a lot of money, but compared to when you do it manually and at the money you spend doing it manually is more expensive compared to doing it with the machine. If you're doing it manually, I think you pay each person around 3,500 per day. Minimum is 3,000 and 3,500 naira per day. And that person you pay, maybe you have to employ 10 people to do that 1 hectare for you, because they won't like go all in and like they will not dedicate the whole time to do the work. So you might have to pay today and tomorrow. Meanwhile, if you're using a tractor, you just do it in an hour or less.
And Africa's oil production is poised for growth in 2025, driven primarily by increased output from Nigeria and Angola. That's according to the African Energy Chamber's State of African Energy 2025 outlook. The report forecasts a significant increase in production across the continent, with West Africa playing a leading role. And we also see the NUPRC there saying that Nigeria produced about 566.8 million barrels of oil in 2024. All right, joining us to unpack all of this is Mr. Dosu Odekunle, is MD, Marquee and Synergy International Limited. Bring us up to speed on what's playing now. But great to have you. Happy New Year. We see oil prices seem to be kicking off 2025 with a bang, but we're seeing a pullback today. Talk to me about this sentiment we're seeing, with oil prices at the beginning of this year.
Hi, compliments of the season. So, President Joe Biden is giving us a parting gift before he leaves office. So the sanctions in Russia obviously jacked up the prices over the weekend, and the sanctions are pretty hard because it's not just Russia. There's China, there's India, the insurance companies, the banks. So it's a wide net. So obviously the market will panic. As you're aware, crude prices are always driven up by two essential things: geopolitical events and economic factors. And in this case now, Joe Biden's blessing has resulted in a spike in price. If you look at the forecast for most of the banks and that are tracking crude price across 2025, the forecast, even US's EIA, they all projected maybe between 73 and 75, thereabouts, in terms of the forecast for crude. And so crude doing 80 early January now I don't think it will be sustained. There are many things to come. There's probably going to be increased production. We're waiting to see what's going to happen when post January 20th with Trump, to see what he's going to do in terms of the Russia-Ukraine war and how that will affect sanctions. And then also U.S. production. Obviously, the more oil there is, the less the price will be in the market.
Right.
So supply and demand.
Looking at the way prices are going, the oil market, do you think is it safe to say the first quarter we're going to see oil prices continue to stay high?
I think it will maintain mid-70s. I don't think it will be sustained at this 80. While the sanctions do appear aggressive and the market is reacting as it normally does, we really won't know that till Trump comes in, and then his body language, if he chooses to maintain what Joe Biden has done. But that's very, very doubtful. We probably will see some reversal of some of these things and his own way of how he's going to resolve the Ukraine war. But that being said, I think that the prices will probably come down again to mid-70s, and then will hold around that area for a while.
Right, and looking at the prices at this point, we know there's that relationship between oil prices and the price of PMS, especially with Nigeria. So, at some point towards the fourth quarter of 2024, we've seen prices were struggling, the global oil market. I would see Brent there was struggling, getting, not Brent, that was WTI, that was sub $60, at some point. But here in Nigeria, we didn't see that aggressive drop, when it comes to PMS prices. But now we're seeing headlines now that from depot owners saying that petrol will cost more due to rising oil prices. So it's so quick for the price of PMS to go up when we see oil prices are rising? Help us understand this dynamic.
So let me start with WTI. So because we don't run WTI as such, I mean, Dangote did buy some US grades, but generally our imports are mostly based on what the refineries sell their prices to us at. The new dynamic, being Dangote being in the system, is definitely affecting what we'll do in terms of imports. And it will continue to affect it as his production improves and increases. Then also the advent of Port Harcourt and Warri refinery, that would also affect what prices will be. So even if the price of crude is higher outside, it shouldn't be as bad in Nigeria because we don't have a freight element. We shouldn't have the freight element anymore like before. There will still be imports to make up for the deficit from the Dangote refinery and the other ones. But that will continue to drop over the year. Now, the relationship with PMS and crude is just what it costs to produce raw material. If the raw material costs more, it will have an exponential effect with the finished product. So that's why if the prices of crude goes up, it will affect everything. So even for Dangote, for example, if he starts buying crude at $100, if crude rises to $100, while it benefits the economy, on the end, the raw material costs $100, so therefore the cost of gasoline will be more. That's just what will happen.
Right, and when the prices go down, can we have some kind of mechanism that brings the price of PMS down in Nigeria?
This is Nigeria. Nothing goes down. I mean, you might experience. So usually, I mean, the law of economics, the way until we reach a certain level of saturation, I doubt that will happen. The marketers themselves will use that as a buffer period, because they don't know what the future holds, and if the cost of their product or the sourcing of product drops, you may see a slight drop, but not such that it affects everything. Nigeria has a lot of uncertainties, and any business worth its metal will use that period as a buffer period against whatever may come during the year. So I don't forecast, from my own perspective, any kind of significant drop in terms of gasoline. If crude drops, right, significantly, if we get to like sub 70, yes, the effect will eventually show, especially with Dangote's strategy in terms of how he's going into the market. Yes, it will show. There could be some kind of drop. But if we maintain the mid-70s as it was last year, I don't see any significant drop in gasoline prices.
All right. So, from my standpoint, it seems if crude oil prices go down, PMS prices will stay stable, but not go down. But if PMS prices go up, if crude oil prices go up, then we'll see PMS price rise. That seems to be the dynamic in the market. But let's look at oil production now. Towards the fourth quarter in 2024, we see Nigeria ramped up oil production there in October about 1.69 million barrels per day for November. December 1.67. It was the average of about 1.4 in the previous month. So, talk to me about oil production, why it improved so much towards the last quarter in 2024, and what you're seeing in 2025.
So you're beginning to see the dividends of the government's action on optimizing crude production. So there's some new production already on ground. I can't pronounce the name properly, Takpite. But this is largely due to the government dealing with crude theft, reducing the amount of damaged pipelines, optimizing fields, encouraging independents and other producers to improve production. And with the wave of that, it's encouraging to see that we've crossed the 1.5 million OPEC mark and going higher. Obviously, we want to see us back to our glory days of above 2 thereabout, or 2 million on an average. And with the prices are at 73, 75 along the year. It should be a good year for Nigeria to help us recover greatly on our economic woes that have happened. But I mean, largely, this is strongly due to the government's policy and the drive, by NMPC and the various parties involved, the security outfits, to reduce theft and have the pipelines fixed quickly.
Going forward, seeing that these two countries, in Africa seem to be, getting most of the production, and we're also seeing a forecast there that Angola and Nigeria will account for, bulk of the production in Africa. Do you think somehow this can point to, energy security for these countries?
So most of our crude is not consumed locally, unfortunately. Angola has a long-standing, strong relationship with China. We are, Nigeria's crude is global, but we have Far East Asia. Our oil goes there. Europe are consumers of our oil. So it's not likely that you could speak to energy security in that sense. The key factor here, though, is when Dangote is actually fully functional, that this statement of energy security will come into play, because then it can consume what is produced locally from Nigeria, Angola, Gabon, or any of these other producing countries. Consume that and then produce gasoline for the region. The refinery does have the capacity to meet the need of Africa and even extra. So that will come into play. But for now, this year, going into this year, even if we are optimistic and we hit the 3.6 or even get to 4 million, the oil will go where it's been going in terms of the Far East. And another thing you also need to look at is that if the sanctions are continued with Trump, or the body line, or he doesn't unwind it quickly, the matter will come for Africa. So, and every nation that produces wants top dollar. So once the eyes of the nation of the global market begin to focus on Africa, they'll look for West African grades and push that out in lieu of what's currently in the market, meaning there'll be no access to Russia. So there's a big deficit to fill with China and India, given that their main source of supply will have been cut off. Which would obviously be good for our economies.
Yes, and talking about economies, how can African countries, capitalize on this expected, that's like Angola and Nigeria, capitalize on this expected increase in oil production to actually maximize economic benefits? We keep hearing about being a top producer of this and that, but it's always hard, for that to translate into development, for the country.
So I could use our nation now as, like you said, the production has shown to go up. It will mean economic policies and encouragement to the local players to patronize locally, meaning the refineries around. Once those are fully functional and there's access, we tap into that, and then once we've fed ourselves, we feed our neighbors. That would actually really, help with growth and energy security. The more these refineries work and are supported, they will increase the level of security, and then exponential, or shall I say maybe secondary and tertiary markets will improve and they will grow. And that will bring a certain level of stability and energy security, that the oil isn't going out, it's coming to the refineries, the finished product is available for us to use and our neighbors.
All right, so much definitely
policies that support them.
Yeah, definitely. Policy-wise, we need to make sure, even though the government gains from sending that oil out, we all need to gain also from getting a feedstock to our refineries as they keep popping up at this time. Thank you so much.
Exactly.
Dosu Odekunle is MD, Marquis and Synergy International Limited. Thank you for unpacking this oil market.
Thank you very much, Laddie. Thank you.
So we'll take a break now. When we come back, we head straight to the markets, find out how your money is performing. That's in a moment. Just stay with us. All right. right, let's head straight to the markets now. We have Anete to bring us the details of what's playing out in the local bourse and international markets that we track right here. Anete, so good to have you. So we're seeing, what's the picture in the markets at this point? Looking at the local bourse, it did kick off January with a bang, but how's it looking?
Well, James, Ladi, I'm without my glasses, so I think I'm a little bit
That's
away from how I used to see things.
Right.
So, but yesterday we saw the market picking up. It was in the green at intraday, but then at the close of the day, it receded. It was down by about 0.8%,
right,
which translates to about 51.10 billion naira
After
in
a little
value.
8 basis points drop yesterday, and we saw the likes of FBNH again,
exactly,
down. So it seems profit taking seems to be, growing, with that stock for obvious reasons. At this point, but it remains to be seen, how this week plays out for the local bourse.
It's going to be very, very interesting, but I think I will not do much of that analysis. I'll leave it to my market guest, but I'll just be talking about the intraday market numbers right away.
Right.
Okay, so now let's look at the board that we have for Tuesday's intraday market numbers. 1.24%, and that massive pullback has pulled back the all-share index of Nigeria's Exchange Limited, where all the stocks are being traded both by foreign investors and local investors. So we have the index down at about 104,056.69 index points. So this number, well, we've lost that 105,000 index point, which we thought that maybe was going to go back into the 106,000, which we saw sometime last year around February. But that is not to happen anytime from within this week, unless maybe some major equity listed on the NGX could make some magic there. But at intraday, 1 hour ago, 1.24% down is what the market printed. For the Johannesburg Stock Exchange All-Share Index, a little reprieve there, 0.85% in the green, 82,000, but that number has not been able to do much magic to what we had been seeing the market. At some point, it had climbed to about 86,000, but 82,749.56, that's what the market number printed just about an hour ago. And for the other two markets on the African continent, we see the EGX 30, so that means that a fairly positive movement at intraday, 0.87% for the EGX 30. Well, it's not been able to get to that 30,000 level, which it's at climb at some point, 28,802.15. And for the close of Monday's trading session, the Nairobi Stock Exchange All-Share Index, 129.66. It was up a tad, 0.02% for the close of Monday's trading session. So that's it for that market. Okay, so now let's talk much more about the domestic market here. Well, we'll be the signation of the eyes is on the telecom sector. Well, we have just about two of them. That's Airtel Africa and MTN Nigeria. But the major one has been MTN Nigeria, which from the start of 2025, which is just about some 2 weeks now, the stock has gained over 21% and also added to the 2.37% year-to-date gain that the market has seen so far. So let's talk more about this. And we have Aruna Kebira, the MD and Chief Executive Officer of Global View Capital Limited, to give us details about this and other latest developments on the Nigerian exchange. Thank you for joining us, Mr. Haruna.
Good afternoon.
Okay, sir. So now let's pick up the tempo a little bit. The shares of MTN Nigeria, that's one of the top 10, if not the most capitalized equity on the Nigerian Exchange Limited. Now, this stock, we've seen that massive gain, massive rally, and investors are really happy about it. But tell us, what are we to expect within the first quarter, not just this month, the first quarter and the rest, given the proposed hike in tariff, which is very, very imminent?
Yeah, you understand that for 2024, because of various reasons, interest rate increase, dollar actually increase, and the devaluation of the naira, the result of MTN was badly affected. Their position was badly affected, that the market drove the price as low as 170, which was close to their 169, which is their public offer price. And, at the turn of the 2025, the market understand that they have applied to the NCC for a 100% increase in tariff. And the market also got the information that the government has given a nod to that, but it might not be 100%. So because of that, as a neglected and beaten price, the market have to reprice it, and that was why it came as low as the 170 that it was to close at 242 naira. What we are looking at is that as far as this has been, the nod has been given, because like I said, it has now actually been revealed by what we said, and it is going to be a win for the telecommunication company. Because if you look at it, I've been discussing with you since yesterday. On my phone, I have Airtel, and on this call, I'm using MTN. It means that yes, we cannot shorten the length of this conversation because of an increase, even if it's 100%. It means that the same services they have been given 2024, they will become more money for it. So it will give them an avenue, a latitude to make more earnings, and which I believe is coming to better their bottom line. So I believe at the end of the day, the telecommunication companies are going to be better for it with the recent approval of increase in tariff for them.
Okay, so away from the two listed telco giants, let's talk about the latest developments in the market. It's just about 14 days within the new year and about 8 trading days. So far, how is the market, besides the 2.37% year-to-date positive gain, how is the market moving at intraday?
When there is a new year, there are predictions, spiritual prediction, physical prediction, metaphysical prediction. Even from the church, a number of people always believe that, yes, it's going to be a new year, and the first 2 trading days actually saw a bull ravaging the market, and the market closed the first 2 trading days, and they continued into last week. But you understand that sadly, and the informed investor will actually sit down and look at what are the fundamentals behind the stocks that are actually rallying. And that is exactly what the investors did last week. And we are experiencing a profit taking, which has actually been responsible for why we saw prices, especially that of the insurance company, because why there was a bull in the run in insurance company was because there was this rumor that they are going recapitalization. But as we speak now, the market is actually sitting down and looking at stocks with the fundamentals. And today, like we have just reported, discovered that the ESI is down. Like before I came on this call, it was down by 1.32 as a result of the price decrease in Dangote cement at 431 naira. And you know Dangote cement belongs to what we call short stock worth over 1 trillion naira. So their direction always determines the direction of the ASI. And because Dangote came down today, the ASI has come down as we speak. Whether they were going to be a turnaround, I wouldn't know. And as we also speak, Airtel is fully on bid, but to move the price up or down in the Nigeria Stock Exchange, you need 100,000 units. But at 2,372, it's not easy to come 100,000 units. If that happens, then there will be a return. Chances are that the ASI will close positive today. So generally, the market is looking at the increase in the tariff, especially for the telecommunication company. They are going to be better their lot at the end of the day.
Oh. Okay, so away from the tariff, tomorrow the National Bureau of Statistics is expected to release the December inflation report, and that has a way of affecting the market. So what do you expect that the market, if it ends today in the red, what's your outlook for the market's close ahead of the inflation reports tomorrow?
For the fact that MTN came down today and brought the market down, it's not a guarantee that another stock will actually come down. Peradventure that Dangote didn't come down today, the market will have come at least close in the green. But what happened today actually will not happen tomorrow. chances are that the Airtel that is on bid at 2,372.50 today, that there was no 100,000 to close it. Maybe there's another 100,000 tomorrow to close it because it closed today. So I'm thinking that the market, beginning from today, will be looking up. The profit taking that happened last week is not going to happen this week because that already happened. And another thing that we know in this market is that when the profit taking period like that takes place and the prices of the stock are bottom out, there is a possible reversal. And if we see that reversal this week and tomorrow, chances are that the market will close in the green.
Okay, Mr. Harun Kabira, thank you so much for your time on the show. And of course, we keep our eyes out for how the market closes for today. And of course, a possibility of rebound in Wednesday's trading session. Thank you so much for your time.
Thank you for having me.
So that was Harun Kabira, MD and Chief Executive Officer of Global View Capital Limited, giving us details of the equities market for intraday and of course what to expect for the close of Tuesday session and for Wednesday. Okay, for the Middle East markets, mostly positive sentiments. Talking about the Middle East, President Bola Tinubu is actually in the United Arab Emirates, which is on one of his visits around the world. So for the Dubai, it was up a tad, 0.04%. Abu Dhabi index 0.46%. Two of them both on the United Arab Emirates, and this is coming in the midst of oil prices and higher commodity prices. We see the price of gold rising, the price of oil rising, as well as some other tradable commodities within the Middle East, particularly on this market index. Now, for the Saudi Arabia, Tadal was up 0.39%, 12,156.94. And the Qatari Stock Exchange, 10,384.89 after climbing by 1.62% at intraday. This is just about 1 hour ago, so that number is still valid as far as the greens are concerned. Okay, so from the Middle East, our next stop is the United States. See the stock futures are rising ahead of two important inflation figures. That's the producer price index, which measures the wholesale inflation. That is expected to be released by 8:30 Eastern Time today, while the consumer price index, which the CPI, will be released tomorrow at the same time that Nigeria's inflation report will also be released. That's also what to be considered. At the same time, the market is also counting down just about 6 days before the inauguration of Donald Trump as the country's next president. That's going to be on Monday next week. So this is markets before the Trump administration takes over, and then we'll see whether this market will maintain the momentum that it has seen. All the three benchmarks, they've declined for the past 2 weeks, with tech shares causing most of the damage. Now, for the Asian markets, we see the Asian markets ending mostly positive after mixed close in the US overnight. We see the Nikkei up 1.83%, the Kospi 0.31%, and then the Hang Seng Index is also in the green. So far, it's the greens have it there. But looking for the rest of the week, the Bank of Korea is expected to meet on Thursday. That's for the Kospi. When you talk about the Kospi, that's where South Korea is. So the Bank of Korea, that the BOK is expected to meet on Thursday, next tomorrow. While China will be posting its GDP for the fourth quarter of 2024 on Friday. Alongside will be the retail sales and industrial output data, which is also slated to be released on that day. Speaking of China, this is how the market ended for the close of Tuesday's trading session. Was mostly in the green. And then we also have that investors will continue to monitor the India's rupee. Yesterday we said that India, their inflation had risen to about 5.22%, and this is just below the expectation of most of the economists there, and is also boosting the case for the prospective interest rate cut by the country's central bank. So the Nifty 50 for the close of Tuesday's trading session was up by 0.39%, 19,219.78 for that one of the world's biggest economy, the fifth to be precise. So Ladi, that's a snapshot of the markets for today.
All eyes on inflation tomorrow. That's for December. We'll see the impact of dirty December
you call it
on inflation numbers. If the inflation will become dirty from all of that spending we saw from diaspora and Nigerians from abroad coming in. We saw the impact. There's a report already on how most of the economy is played out. That's most of the shortlets in most of those highbrow areas, we see most of them had huge demand, in December, from all the parties and all of that. We'll see how that plays into the inflation numbers for tomorrow.
As well as the holiday retail sales. I saw that the holiday retail sales were quite massive.
It seems the consumer was quite resilient.
Dollars globally. And Nigeria is not left behind in this retail sales. You might not call it retail sales, but it has a way of playing into what the whole of December, the holiday spending month.
Right. We'll see how it plays out for tomorrow. Thank you so much. I need to begin all the details there for what's happening with the markets that we track. Well, let's take it on to Europe now. We see U.S. high-tech companies. They've not had it easy in the EU for years. The European Commission put them on an even shorter leash now, trying to ensure that fair market practices. Now, the Commission says it will reevaluate its probes into some of the world's most powerful companies. Lars Holter is with DW and joins me. Great to have you, Lars.
Good to be with you, Ladi.
So, what exactly are you hearing?
Yeah, thanks for having me. It's true, the European Commission is re-evaluating its probes into these US tech giants, including Apple, Meta, and then Alphabet's Google. Now, these companies have been under investigation on and off for non-compliance with the EU Digital Markets Act. That particular law, the DMA for short, took effect in 2022 with the explicit goal to curb the power of big tech and ensuring a level playing field for smaller rivals. Among the investigations were, or still are, how Apple deters app programmers from contacting users outside the App Store, how Google is pushing its own services like Google Play, Google Maps, or Google Flights through its search engine. With regards to Facebook, it's about their pay or consent model. There's quite a lot of investigations there, and there are stiff fines in that law that allows the EU to assess fines as a percentage of the company's revenue. So whatever Brussels decides, and especially what Brussels enforces, could very well damage the financial health of any of these big tech companies.
All right, and we see the EU having an impact on how these big tech companies, go about their business. But why is the EU now rethinking its efforts, to rein in these tech companies?
Well, that's very much because of the change of guards in Washington. We've seen over the last couple of weeks, pretty much ever since Donald Trump won the election, how these tech firms moved closer and closer to the new occupant of the White House. The bosses of Alphabet, Meta, Apple, you name it, they all met with Trump privately. They donated millions to him and his inauguration fund. And it's not because they truly love the guy. No, it's obviously strategic. They want to be on Trump's good side because as president, he will have all sorts of regulatory power within the United States, but he can also be a helpful ally abroad. What we're hearing is that Trump, who is already pressuring the European Union to change its ways, could threaten the EU with trade impairments if they don't let off these tech firms. His USA First policy can be expected to help protect the interest of US firms around the globe, and the European Union knows if they keep putting pressure on the likes of Apple, Google, and Facebook, the US will make them pay.
So, from what we're hearing so far, is it safe to say this US tech companies could maybe have it easier in 2025? Is there any indication of that in the EU?
I think certainly that's an indication for those tech companies. It's definitely a good sign. However, I would always probably take that with a grain of salt because nobody really knows what Mr. Trump's policies in the White House will actually be. Will he actually put the kind of pressure on the EU as he is threatening? How will he deal with these geopolitical and geoeconomic problems once he's actually in office? Because he will find out, and he has over the last couple of weeks already, that a lot of the policies and a lot of the pressure he wants to extend abroad is actually not working out quite as easily as he wants. So we'll have to see how that works out for him, how that works out for trade, and of course then by extension how that works out for different companies, whether this is in the tech sector or not.
All right, let's look at the markets now. What are investors looking at today?
Well, it's earnings season, and we're getting some numbers from the auto industry. Volkswagen came out with pretty much what we expected. They sold about 9 million vehicles last year, but that's down 2.5%. Sales in China are down 10%. Didn't have too much of a reaction. Well, let's say a little bit of a positive reaction actually in Frankfurt, with shares up about a percent. That is actually slightly stronger than the DAX is doing, which is currently up about 0.7% after yesterday's weakness. And staying with cars yesterday, of course, we already got some numbers. They are, some of them, in fact, a bit better than expected, but all of them showing, and that brings us right back to Volkswagen, to these most recent numbers from just an hour ago. So all of them showing that massive drop-off in business due to increased competition from China, due to drop-off in market share on that Chinese market. Staying with the sector, however, there's a little bit of good news for Daimler Trucks. A major deal as Amazon ordered 200 battery-driven trucks. So we're talking semis here. That, of course, is not just one truck deal, but it's also putting out a sign there for other major transport and logistics companies to maybe follow suit and go electric with their truck. So change, it seems, is coming to German roads, but it has been slow.
All right, we'll keep tracking that change. Thank you so much, Lars Holter. Thank you.
Thank you, Ladi.
All right, let's get a check on what's playing out in East Africa now. See, the Kenyan government is seeking public input on a sugar tax. Kenya Sugar Board has called on Kenyans to submit their views on the proposed sugar development levy, as outlined in the Kenya Sugar Act number 11 of 2024. This follows the signing of the Sugar Bill 2022 into law by President William Ruto. In a notice published in the government's paper there, the board's acting CEO urged citizens and stakeholders to submit their comments and written memoranda by Tuesday, January 21st. All right, now let's look at the metals market now. We see gold prices recently surged to a record high of $2,650 per ounce, despite a strengthening U.S. dollar. This unusual trend, which contradicts the typical inverse relationship between the two, has caught the attention of analysts. Well, joining us now is Rosemary here as an analyst with FDC. Great to have you, Rosemary. So what factors are driving the unexpected rise in gold prices, despite the strengthening U.S. dollar, and how does this defy traditional market patterns?
Hello, Ladi. So the factors that are causing this unusual behavioral pattern between the price of gold and the value of the U.S. dollars is a combination of geopolitical and monetary policy factors. So the ongoing war in Ukraine, coupled with tensions in the Middle East, have increased the demand for gold as a safe haven asset for investors. And the potential trade tensions between China and the United States have also contributed to this. So if the United States impose trade tariffs on Chinese exports, China could retaliate with their own set of tariffs as well. So this could impact global trade and also cause economic instability. So with the fear of this instability, investors are likely to move towards gold and securing their wealth and protecting their wealth with gold. And on the part of monetary policies, we saw in 2024 that the U.S. Federal Reserve reduced their interest rate by 50 basis points in mid-September and by an additional 25 basis points in November of 2024. So, and there is a likelihood for further interest rate cuts, not just by the U.S. Federal Reserve, but by major central banks like the European Central Bank. So what this does is that it reduces the opportunity cost of holding non-yielding assets like gold. So this helps to sustain the demand for gold globally. So with this set of geopolitical tensions and monetary policy easing, this has helped to hold the demand for gold, which has caused an uptick in the price of gold despite a strengthening dollar.
All right, we'll see if gold continues that monster run in 2025, and if there'll be demand for the safe haven asset. But thank you so much. That was Rosemary here, analyst for Financial Derivatives Company. Thank you.
Thank you for having me.
All right, now let's get a check on what's playing out in the crypto market. We know it was pure red yesterday on the board, but that has changed today. We see it's more of a green scene there we have in the markets right there with XRP also deeply in the green. Bitcoin 4.86% after revisiting about $91,000. If you look at the chart, it did fall below 90,000, at some point, tested $89,000, but we see Bitcoin back up again, 4.86%. Seemed like some kind of double bottom was forming on the one-day chart. If you check that out, XRP $2.58, 5.77% up, deep green. XRP again might be starting its own rally with Cardano also dropping below $1, trying to get back above that. Let's look at the sentiment in the market now, how investors are feeling. They're feeling greedy again. It got to neutral yesterday. That was according to Coin Market Cap. But we're seeing Coin 360 there giving us greed now, 63 points. That's for how investors are feeling the market. Let's look at some headlines now. We see Tether as they're mulling a move to El Salvador. That stable coin you hear about a lot in the crypto market. That's the company behind that cryptocurrency. So they're planning to relocate its headquarters from British Virgin Islands to El Salvador with the aim of leveraging the country's crypto-friendly environment. Then we're also seeing BlackRock. They're buying Bitcoin, but Fidelity, they're selling. At this point, going on the opposite direction. We see BlackRock revealed they purchased 318 Bitcoin, as U.S. spot Bitcoin exchange traded funds. That hit the 1 year high after being approved and launched. Fidelity also sold about 1,210 Bitcoins from its Fidelity physical Bitcoin ETP. So we're seeing both doing different things right now in the market. That might be driving sentiment from what we're seeing in the market with Bitcoin recovering from about sub $90,000, something about $89,000. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Good afternoon, Adi, and Happy New Year to you.
Happy New Year, Rume. So we're seeing Bitcoin revisiting some lows. Some would say 90K is definitely a high. At this point 80,000 is also a high, but it cannot go up forever. So it's visited $89,000, but we're seeing a big bounce in the market. Is it Bitcoin just playing with the charts, just following what the charts are saying at this point?
All right, because a lot of things are happening in the market. I think a couple of persons are doing profit taking. A couple of persons are actually reconsidering their portfolio, considering what is happening in the United States economy. And also you can see that the dollar is gaining. A stronger dollar is actually, we're seeing 109 right about now. And as the fact that the new U.S. president is coming, we don't know if the dollar is going to move up. But if the dollar goes down, softens a bit, we are going to see most times Bitcoin go up. But when the dollar is strengthened, people actually don't look at risk on asset like Bitcoin and other cryptocurrencies. So a lot of data are going to come up this week. CPI is going to be tomorrow, and I think PPI today, and a couple of earnings are going to be coming up. So the market is forward thinking, and with that, it's already suggesting that we might see some downs for now. Then probably towards the end of the year again, or maybe when there are favorable signals, things are going to go up. But again, a lot of persons are actually anticipating 20th of January. But the truth is that we already know that Donald Trump won the election and Donald Trump is going to be inaugurated. So for some persons actually saying that on 20th of January, we're going to see the market move up, that is not really a very strong way to speculate the market. Sometimes it goes down, and when there's a buying pressure, it goes up again.
Right, so I guess you're not expecting any hurrah move from Bitcoin on the day of inauguration. that's priced in, according to you?
Yeah, exactly. Larry, the truth is, we might just see some buy the rumor, sell the news kind of thing. We have exhausted the Donald Trump news from when the possibility on polling market was bet, where the bet came up that he most likely win till his eventual winning landslide, right? At some point, some of us felt like there could be some tire at some point, then he eventually win, but he won landslide. So the market responded to that. From there to now, we also saw the ETFs, where the market moves from about 50 something to $108,000. This is Bitcoin in years past that was selling for less than $1. So we have exhausted that, and at some point it has to take a breather. Then we can see possible movement again when institutional funds start to come in. We're already seeing the ETFs outflows gradually, but my telltale signal is the ETF and also MicroStrategy. He's buying a bit, but a couple of times not as he used to buy. So you see that the interest before now compared to what it was before is a bit dropping. So, but retailers are not looking at that. They always think that the market will always go up and up and up, and it doesn't work like that here.
Right. Well, we've seen headlines flooded with MicroStrategy buying 5,000 Bitcoins, 6,000 Bitcoins. But I guess at some point that has to slow down. And we're hearing Jamie Dimon there, JP Morgan CEO, saying Bitcoin is just for criminals. At this point, that's his latest statement.
I'm kind of embarrassed by the CEO of the biggest bank in the United States saying that Bitcoin is a money for sex traffickers, money launderers, and also ransomware. It's quite embarrassing because we have seen how Bitcoin has actually changed the digital way of value transfer, and we have also seen that the Bitcoin blockchain is most transparent, like it is much more transparent compared to cash. We've seen a situation whereby law enforcement agents all around the world are tracking proceeds of crime with Bitcoin or cryptocurrency analytic companies to where they are, and at the end of the day apprehending most of them, but in the case of cash, we have not seen. Cash is the most used currency to commit crime all over the world, and we've seen a situation here even in our clients Nigeria, where the Economic and Financial Crimes Commission have actually applied those tools being used all around the world in the globe to track illicit transactions. You can actually track illicit transactions. The Bitcoin blockchain is open for everyone to see transactions. You can go to the Bitcoin Explorer and you see all the movement in transactions. So for him saying this, if you ask me, it can be a way to distract, to put smoke screen for people to have this doubt about Bitcoin. Then the institutions or maybe his bank stylishly accumulating. But if you tell me that someone as popular, as an intelligent as Jamie Dimon, the CEO of JP Morgan's, to be saying something like this, it only suggests that it's either is deliberate or he's trying to pretend that he has zero knowledge of what Bitcoin has actually proved to the world to be a seamless and a transparent means of transaction, which I even think that governments around the world are already looking at, because you can track illicit transactions, but we're seeing people moving money, or politicians all around stealing money and all of that. That can be actually handled well by the blockchain. Maybe
at some point we'll see the full use case of Bitcoin, when it comes to that public ledger and the blockchain technology, and that. But it seems you guys might find it really difficult to convince, Jamie Dimon otherwise. But thank you so much, Rumi Ofi. Always great having your perspective. Thank you.
Thank you very much, Ladi. Thank you.
All right, so that's how most of the markets we track are looking. We're seeing Bitcoin there recovering with a bounce. Most markets we track, the local boss deeply in the red at intraday. We'll see if that flips before the close of trade today. Thank you so much for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.